right, good morning, everybody. Happy Tuesday. Today is February 7th, and the big event for today is going to be Jerome Powell coming out to speak with us at 12:40. If y'all want to see Jerome Powell speak live and my reaction and trading with it, then leave a like on the video. And if you don't, then that's all right too. But so far, to the start of the market, we are bearish. Looking at the 2-day 5-minute chart, right now we're trading at $409.15. The RSI is in oversold territory, currently at 32. So definitely a bearish pre-market start. And we have some supports at 408.50, 410.79 resistance, and then 412.36 resistance, and then that 408.50 support and 406.60 as support. So those are the few price levels we're going to look at before the meeting, and then after the meeting, we might be seeing us go to the bottom of the risk range all the way down to 404. But if Jerome Powell doesn't walk back some of the statements that he made last Wednesday in the FOMC meeting, then we might be headed to the Fibonacci retracement all the way at $418.21. So expect a lot of volatility because this is Powell speaking after all, which is always the most volatile. But let's get started. So those are the price levels to watch today. And what could be selling off the market right now is the dollar index gapping up again, second day in a row. And then the 10-year Treasury yield, again, gapping up second time in a row. The 10-year Treasury yield closed at around 3.634 yesterday, and it's currently at 3.653. So a small gap, but a gap nonetheless. And then the Dixie is up from a close of 103.59 to 103.79. So very small gaps, but gaps nonetheless. And whenever the dollar and the yields start to rise, usually tech and growth names will start to come down. So you're probably going to see a little bit more pain in QQQ this morning than you will for SPY. Interesting enough, QQQ is mostly unchanged, whereas SPY is down around $1, about 0.25%. So if you want to take a short position this morning, I would probably take it on the Qs, because when interest rates rise, the dollar rises. Tech stocks usually take the beating worse than you'll see for SPY. And then if we look at the Dow Jones Index, this is the one that's dragging the market, interesting enough. Usually whenever the dollar is going up, this means that value stocks will do a little bit better. So that's your Coca-Cola, Walmart, and what are other ones that people use? Those are the two that are off the top of my head. But these two, Walmart's down by 0.75%, and then Coca-Cola down 0.8%. So staples are down this morning, but Qs are managing to be up even with the interest rates and the dollar rising. So I think that could flip to where we see DIA in the positive and QQQ in the negative. So you could hedge one position versus the other. Assume that Dow is going to go up while the Qs will go down. SPY puts right out the gate. That might make some money. Right now, SPY is down 0.25%. It's below 409, so it's coming close to that 408.50 level. I would be a little bit hesitant unless we end up breaking that solidly. Got volume coming in, but right now we're trading just above it. I already have an open position from yesterday that we'll take a gander at. It was a 413, 414 call credit spread for SPY. So we head on over to Robinhood. This one should be up a decent bit. $52. Going for 18 cents each. I want to close them below 15. So there's still a little bit of value for these to lose. The bid ask is surprisingly tight for the first minute of the market, at 16 cents for the bid, 18 cents for the ask. But because of the expected volatility around Jay Powell speaking at 12:40, it's a little bit pricier for these options than it otherwise would be. If there wasn't a Powell speech today, I would imagine that these would probably be going for like 12 cents or something like that. But because of the implied volatility around the Powell event, that raises the value of the options, which increases the spread or the difference between what you're paying for each option. Who's the baby man? Oh, man. Actually shaped again today, so we might just keep it off until the end of the bear market. Until we flip bullish again. All right, what else we got? So I opened also a GLD Leaps option yesterday, 12/20/2024 expiration, 160 strike price, and I picked it up for $3,125. And this is going to be my hedge against the bearish position that I have open for SPY. Right, so I'm assuming that SPY will be below $413. It's bearish to neutral, actually, since it's already trading below that. I might even open a put debit spread ahead of it. But I also do have a PayPal put debit spread. Their earnings, I think, is scheduled for Thursday, if I remember correctly. Let's see, PYPL. So we still have a ways to wait for their earnings report. Scheduled for 2/9. But my assumption, if Fed Chair Powell comes out more hawkish today, PayPal would probably take a little bit of a beating, considering the rise from 66 to 88. This is a tech/growth name, and those will usually get hammered a little bit harder if we do see the Treasury yields and the dollar rising, if Powell comes out more hawkish than what's expected. You're going to see a lot of changes for what's known as the Fed futures. I'll link this in the chat. So we'll take a look at it before and after, I guess. I'll link this here. But right now, the odds of a 25 basis point rate hike for next month on March 22nd is 90%. So if we see this flip to where there's a higher chance of a 50 basis point rate hike, that would definitely cause the markets to shift around and go negative. And then we're also looking at September. So this is where they expect rates to peak at 5%, which is where the Fed is expected to be by the end of the year. So this shouldn't come as any surprise. But then the markets expect the Fed to pivot in December at the moment. So this is mainly what to watch for today after Powell's speech. If this ends up changing to where there's no more rate cuts that are expected for the end of the year, then you'll see a decent sell-off in the stock market. And obviously, like, these probabilities are always changing, so you can't rely on these numbers. They're going to be changing day to day. So I wouldn't, put this in concrete and say this is what it's going to be, because there's always new data coming out. There's always new Fed speakers that are coming out to speak and change the market sentiment, which would change the Fed futures. So, yeah. Anyway, this SPY call credit spread is currently up by $48, trading at 17 at the moment. Still waiting for them to come below 15 if I can. I'm thinking about opening a put debit spread for SPY, but I feel like it's already too late. Actually, maybe not too late, considering it's only down 0.25% from yesterday. And I want to say we could go below 407, 406, 407. And that's if Fed Chair Powell comes in more hawkish than expected. You're going to see probably another 0.5% sell-off or so. I wouldn't put a lot of money on it though, just because it is unknown how he's going to come out. But, always put a little bit of risk up on the table just in case. And then we do have that gold as a hedge too, so that kind of helps us out. Even if we're wrong on this, we'll still make money on gold. All right. Looking at the put debit spread, they're going for 35. Oh, they just dropped in value a little bit. All right. I snagged them up at 33. Sweet. I actually got a good deal on that. Hopefully, that is. So new options alert, day trade, P1F. Just opened a new SPY put debit spread that expires today, 2.7. And then I'm assuming that it'll be below 406. At 33. Okay. All right. Powell speaking today at 12:40 p.m. Could walk back some of his remarks from FOMC meeting last Wednesday, which would cause rates to go up and markets, stocks to fall a bit more. Doing 10 times more. What happened to the stash? It fell off. No, I ended up shaving it because of the baby. Kept getting food on my face, which would transfer to her face, and then I would have to clean it up, and that was no fun. But yeah, Powell's going to be speaking at 12:40 today. I'm thinking about holding a live session on that. So if y'all want to see that, make sure to run up the likes. We have 10 likes right now, 45 viewers. So let me know that you want to see that by leaving a like on the live stream, and I'll make it happen for y'all. Looking at the hourly chart, we're still under 50 RSI, so that's bearish too. And then we have the 5-minute chart bearish on the RSI below 50. We did get a rebound off of that 408.50 level, and we are headed back to 50 on the RSI, but I'm still going to be holding that 406 put debit spread for after the Fed meeting, and I'll probably close out of the call credit spread before. That way I'm not over leveraged to the downside. Right, so I already have this trade. I've got the put debit spread that I just opened, and I've got PayPal put debit spreads. So we want to reduce our exposure going into the meeting. That way we don't just get slapped across the face on all the bearish trades that we have if Fed Chair Powell does come in bullish. Whichever way the market goes, the trend will be strong for the remainder of the week. Well, let's see. It really depends on what data is coming out, and I don't think there's much important data, right? So if we go over to the economic calendar from investing.com, this is the one that I prefer to use, and I'll link it in the chat for y'all. That is a really 401, 416 strike prices. That's really wide if that's a iron condor. But yeah, that would probably work out considering that the risk range is 404 to 420. If anything, if Powell does come in dovish and kind of confirms what he said last week, I could see 420 happening again. So I would be worried about the 416 strike prices if this is expiring for Friday. But given that you have that little bit of extra time, there could be new data that ends up cooling off the market if it does get super hot. So that could end up working out. But looking at the data that's coming out this week, we have today is Tuesday. We don't have any more data coming out today, but we do have Powell coming out to speak at 12:40. Like I said, Barr is speaking at 2 p.m. And we have consumer credit coming out at 3 p.m. That's not important in terms of the implied volatility that's expected for this. But I do think that it could be very telling as to how the consumer is doing and how much they're paying to service their debts. Because the more that interest rates go up and the more debt that people are taking on, the more that paying off that debt each month and paying the interest towards it is going to eat into people's buying power. So that means that there's going to be less spending in the economy because more money is being spent towards debt. And for Wednesday, we have Fed Williams coming out to speak at 9:15 in the morning. Barr is speaking again at 10 a.m. We've got Waller speaking at 1:45, and then we also have a 10-year Treasury auction at 1 p.m. So with a 10-year Treasury yield, or with a 10-year Treasury auction, I know it sounds boring, but this is what's going to dictate the rate of the 10-year Treasury yield. The way that it works is it's an auction where the Fed is selling off bonds from their balance sheet, and we have to determine if there's enough buyers to substantiate the new selling, that's the new supply that's hitting the market. So this is based on supply and demand. If the demand for these bonds is high, then the price of the bond is going to go up, which means that the yield for the bond is going to pull back and go down. Whereas if this new supply, this new selling of these 10-year Treasury yields is greater than the demand, then the price of it is going to go down, the price of the bond, which means that the yield is going to rise. Yeah, it could definitely have that effect. We are pretty early in the year, only February 7th, and there's a shit ton of data to come out, especially with CPI coming out next week. That could be big sway for the market too, right? But initial jobless claims coming out at 8:30 on Thursday. That's the big event for Thursday. And then Michigan economic report and Waller speaking on Friday. So not a lot of data that's coming out, but after the non-farm payrolls, I would think that the next jobless claims is going to have a little bit more weight to it because everybody is talking about how hot the job market is right now. And if it continues to show that strength, that means that the Fed has to raise rates a bit more. We have seen the highs for the year already. That definitely could be. My expectations for 2023, it's kind of hard to put like a nail in it to say we're going to be at X price by the end of the year because the volatility is so high to where it's very difficult to predict. The trend is definitely, almost certainly still down. If we're looking at the weekly chart, it's not really going any higher. We did see a higher high out of this bull market rally than we have previously, I will say. This trend line is no longer relevant to us. But we're definitely trading lower. We're trading higher than the last high. So if you're looking at technical analysis on a shorter time frame of just since October, which is 5 months, then we're definitely bullish. But this could end up being the end of the bull market rally in the next couple of weeks as Fed Chair Powell comes out to speak today, and as CPI comes out, if CPI comes out a lot hotter than what's expected. I think that this CPI, though, probably not going to be that much higher than expected. I think it's February that's going to be higher than expected because of the new 25 base point rate, or because of the lower rate hike at 25 basis points versus 50. That's just my thinking behind it, because we've seen a pullback for interest rates over the last, let's check out the 10-year. The 10-year is like the best proxy of interest rates, I would say. Let me get rid of all of these price levels that I have. This looks dirty. But if we're looking at the last month or last couple, like 5 weeks, the 10-year Treasury yield has pulled back since December 2022 from almost 4 to 3.65. It went all the way down to 3.4, and now it's at 3.6. So it's in the middle of the range that it's been. But that pullback made people kind of trigger happy, to where whenever the mortgage rates started to come down by about 1% or so, people started to buy up homes because of the lower interest rates. So we're seeing still a lot of demand in the economy, despite the crazy fiscal tightening that we've had over the last year. It's what's known as aggregate demand. So when interest rates go down from a very high level, then people, if they still have cash left over, they're going to step in and they're going to buy homes or buy high-priced vehicles. We've seen some inflation in homes and vehicles over the last the last month. But, if the interest rates go back to where they were, then you're going to see a pullback in that demand. You want to automate trading to take out emotions. I would say you just have to be neutral about it. And I know it's very hard to stay neutral in the market because of how crazy volatile it is. And trading is very binary, right? Either the stock market is going to go up or it's going to go down. But a way that you can try to take emotions out of it without having to automate it is hedging your positions. So for me, what I did to hedge my positions is I took on a bearish trade, 2 bearish trades actually, one before the meeting and then one after the meeting today at 12:40. But I have a bullish position with gold, GLD, with his leaps. So either way, it's likely that I'm going to make money out of this event. Because if Powell is more dovish than what's expected, that means that the dollar is going to fall because it's been rising over the last few days, which means that gold, it trades in inverse relation with the dollar. So whenever the dollar goes down because of Fed Chair Powell coming in more dovish than expected, gold is going to go up. Whereas if he comes in more hawkish than expected, that's going to kill equities because they've been doing so well over the last week since Fed Chair Powell's last speech. So I have the bearish position, I have the bullish position, and I'm trading this both ways. So that's how you can take emotions out of it. Right now, we're just kind of trading flat, right? So markets are trying to decide whether they want to go up or whether they want to go down ahead of Powell, which that's not too shocking for me. That was my analysis that I wrote up over in my trading calendar. And if y'all want access to this spreadsheet, it's got my trade log, so all the trades that I made. It has a calendar that shows my P&L, and I also write the notes for each day on how I'm feeling about the stock market. If y'all want access to this, this is available on the premium Discord, which I will link to. Detailed trading journal available on premium Discord. I'll pin that so people will know. So if y'all want access to this, go check out that link. You also get trade alerts and things like that after the live session is done. But in the notes today, I wrote the sentiment is, the notes for today, the sentiment is bearish or neutral. Reasoning being that the Dixie or the dollar index ended up gapping up overnight from 103.79, from 103.62 to 103.79. So a very small gap up, but a gap up nonetheless. And then the 10-year Treasury yield also gapped up from 3.364 to 3.657. Then we have Powell coming out to speak to the markets today, which the markets could be fearful of, but they might be indecisive also ahead of Powell because we don't know what he's going to say. And the question that I asked myself is, will he hose off the market rally and backtrack what he said in the FOMC meeting, or will he allow this rally to continue? We'll have to see. So that will be, we'll get the answer at 12:40 whenever he actually speaks. And if y'all want me to live stream the speech, make sure to leave a like. We got 20 likes and 70 viewers, so get those likes up, and I will be back at 12:40 after we end this. But price analysis wise, we can just go to the charts for that. We have a support at 408.50, 406.60, and then 404 is the bottom of the risk range. So if he comes in incredibly hawkish, we could see us go below 404. But then if he is dovish and he confirms what he said last week. Oh, I had the old log. Yeah, I'll update that. So if he confirms what he said last week, then we'll see 410.79, 412.36, and then 414.86 as resistance. I would imagine we could go back up to 414.86, and if he's super dovish, and if he kind of confirms that we could cut rates, we might even see the Fibonacci retracement all the way at $418.21. But, that's $9 above where we're trading right now. So that's like a 2% rally. And we haven't seen that kind of crazy volatility as of lately. So I will update that link for you, though. Let me file. Share. Share with others. Copy my link. Okay. Premium start page. All right, so I got that one, and then we head over to where is my copy of it? I'll have to find that later. I'll update this for now. Very scared of what Powell might have to say. Love to hear my perspective. Yeah. I will I'll think about it for sure. Got the newborn to take care of, but if there's enough people asking for it, then I'll have my wife take care of the newborn. Hopefully she can be understanding of it. But looking at SPY 409, so we're not even going below that 408.50 level yet. We're not going above 410.79. So just continued flat trading action. We are seeing declining volume. So we saw a lot of volume in that first 5 minutes. We always see that though. And then it's just been kind of dying off ever since. There really hasn't been a major increase in volume. We might see an increase in volume after we hit one of these price levels. In that case, I would expect volume to go back up, which means that we could retest that price level. So if we go below 408.50 right now, and then volume starts to pick up, we're probably going to see that 408.50 level again. This is the way that volume and price levels kind of work. It's not, an exact science, but if you see increasing volume after hitting a price level, then you'll retest it. But if you see decreasing volume after hitting a price level, then that's usually a confirmation that penetration is going to continue. So if we have high volume going into 408.50 and then decrease volume afterwards, then we would continue to go below 408.50. My thoughts on Lumen after the markets. Let's see. I haven't followed this company too closely, so can't give much of analysis, but this is trading at basically 52-week lows. Is this a LiDAR company, I think? Lumen Technologies. Telecommunications company. Huh. Let's see. Lumen Investor Relations. Biggest telecom supplier in the world, or in the US. I don't think that telecom is gonna be whacked. So telecommunications is a necessary service even to have during a recession. They are starting to see a decline in their profits, though. They went from 51 to 59, 35-cent earnings per share, 14-cent earnings per share. So that's kind of the concern that the markets are having, that they're going to continue to see a decline in their earnings. And if we go over to the investor relations page, what I really like to pay attention to, especially right now, is their cash flow. So if we head to their financials and their SEC filings, go to the latest 10Q. Where is their latest 10Q? It's probably filed last year. Yeah. 10Q filing. We'll open the PDF and then head to statement of cash flows. So the cash flows from operating activities, this is how much cash they're generating from the business itself, which ended up being $3.9 billion. So this is in millions, and this is 3,800. So this is $3.89 billion that they made in cash from the business itself. And then if we look at their investing activities, they ended up making $600 million proceeds from sale of their business. So they're selling off part of their business, and then capital expenditures, not exactly sure where that's coming from, but they sold off part of their business for $2.7 billion, which helped them come up with $600 billion in cash. And then in financing activities, they ended up making they ended up losing $4.6 billion, and most of it is just coming from paying off their debt. So they paid off $3.9 billion in long-term debt. They ended up paying out $780 million in dividends. And now we want to look at the cash at the beginning of the quarter and then at the end of the quarter. So at the beginning of, sorry, this is not a quarterly basis. This is actually the last 9 months. But at the beginning of the first 9 months, they had $409 million. And right now, they only have $265 million left in cash. So that's what the markets are panicking about and why you're seeing Lumen trading at the 52-week low. They barely have any cash left. And if they continue to burn at the rate that they are, most of it being in financing activities, they don't have much time left. Like, they have probably about 12 to 18 months at this burn rate. But they are making money from the business itself. Like we talked about, their operating activities, they're making $3.9 billion. So as long as they're not continuing to pay off their debts at $3.9 billion, then yeah, they would be fine. But that's their main expense, is paying off their debts. So then you would want to look at like their balance sheet and see how much debt they have left to pay off. And this was specifically long-term debt that they were paying off. Let's see, current maturities of long-term debt, $3.4 billion. Long-term debt, this is what we want to look at. So they have $22 billion in debt almost. So if they want to pay off their debt at the rate that they have been, they're not going to have much money for much longer. And then if we look at their cash balance, that was like just a few $100 million. So they are super over leveraged. They have a shit ton of debt, which isn't a good place to be right now whenever interest rates are going up. Yeah, they cut their 9% dividend. I mean, they can't pay out this $90 billion, I think it was, every 9 months if they only have $300 million left in cash. Or sorry, it was $90 million in dividends and they have $300 million in cash. If they keep doing that, they're going to run out of money soon enough. Yeah, no problem. Yeah, but I would definitely, like, if you're looking at finding a good stock, the most important things that you can look at is going to be cash flow statement. And then if they are running low on cash like we determined, then I would look at their balance sheet, see how much debt they have left. And then we already know what their cash balance is from the cash flow statement. That's Lumen for you, though. Put debit spreads are back to break even, so I assume that the markets are pulling back a little bit right now. What are we trading today? I'm trading SPY as I usually do. Could trade the Qs too. Qs would fall a bit more. But we're just trading flat at the moment. China has more ICBM launchers than U.S. American military reports. What is ICBM launchers? ICBM launcher. Intercontinental ballistic missiles. I don't know why we got to perpetuate this war with China. Just leave them alone. They have 1 billion people to go to war with, and we have like 300 million. That is a dumb war to take on. And they can force their people into war because it's a communist country. Whereas the U.S., we don't have a mandatory draft anymore. So that is a terrible war to start. Let's see, though. IWM is down the most at the moment, currently down 0.65%. So the high speculation, small cap names are down a lot, with IWM down 0.7% versus SPY only down a 0.15. And the Q is surprisingly about flat. So I think that gives us a decent opportunity to trade the Qs on the downside after the Powell speech. But we already do have the SPY puts, so I guess we'll avoid it for the moment. Dollar index is still pushing up, 103.90, a new high for the day. 10-year treasury yield is about flat, almost back to where it was at close yesterday, so not really much change there, but the dollar is just pushing higher and higher, which means that gold is probably coming down at 173.84, but you also have the balance of the threats with China and the war escalations in Russia. Whenever global tensions are rising like that, you're going to see a rise in GLD and gold and other precious metals. So it's kind of a balance between the dollar going up, but then also the global tensions. Putting my whole account on UBIX if the war starts. I feel like China-U.S. relations have just only been getting worse and worse and worse. At some point, it's bound to blow up. I say we just leave them the hell alone, but the U.S. has to push their agenda of democracy, which isn't real democracy, but it is what it is. All right. Have I heard about the China 2065 plan? No, I haven't. Let's see. China 2065 plan. China's population could halve within the next 45 years. They would still have 1.3 billion people, though. How would they still have 1.3 billion if that's how many they have now, right? Researchers say previous estimates that they have severely underestimated the pace of demographic decline. Consensus data says that the birth rate was 1.3 children for each woman last year, well below the level needed to stop the population from falling. I mean, that's the effects of their one-child policy that they had for 20-odd years. China's population decline has been much faster than expected. Number of people in the country having within 45 years. The thing is, though, with this kind of stuff, if they take notice of that and if they think that's a bad thing for, the country, they can always supplement growth by giving out stimulus for children. That's something that actually I've been thinking about for the United States and how we have a declining population, and part of that reason is because people just can't afford to have a child right now because of the high inflation and the cost of everything just rising like hell. On top of that, you're paying basically your rent for childcare. And if we subsidize that with more tax credits, say gave $1,000 a month or $1,500 a month for people to have children, then they would be more likely to have children because now they can afford it. Now they get rid of that problem, which I think that the government should do. I'm a little bit biased because, I do have a child, but I think that's the solution if we do want to grow our population. Otherwise, if we don't grow our population, we're just going to end up like Japan, where their birth rate just ended up going flat, and they have a declining and aging population, which means that there's less people in the workforce, so there's less production, and there's less. I don't know if there would be more or less spending in the economy because people that are older tend to have a little bit more money to spend. But if your production is falling, then that's not a great sign for your economy, and that's why you've seen the Japanese stock market trade flat for 30 years. I think it's trading relatively high recently, but because of the aging population, they're not producing as much, so they can't make as much value out of their economy. 2035? Let's see. China 2035 plan. Refined development objectives for 2035, placing greater emphasis on technological self-reliance, national security, and rural development. Highlighting Beijing is prioritizing high technology at the top of the economic policies. That they say that though, but they're so harsh on their technology, like Alibaba. Like they basically made the Alibaba CEO disappear for like 2 months. So it's conflicting to say that's their objective. I would say China is quite ahead of us in terms of technology, and I think that's the leverage of having 600 million more people and their curriculum for schools being more STEM based, whereas the United States is definitely not that. It's more social problems, and I feel like our education system is just shit compared to China. Like it's more real world things that are more applicable, whereas in the US it's like, oh yeah, we're going to learn this math that you're probably not going to use in the future, and then we're going to learn about history that you could just Google, right? Like why don't we have actually applicable things to learn to where we can add some skills to our children instead of just having them regurgitate Columbus sailed the ocean blue in 1482 or whatever year it was. I could just Google whatever year it was and I'd be fine. Yeah. Yeah, our education system is so freaking stupid. But that's also the result of the education system being free, right? Free. You pay taxes for it, but it's accessible for the masses, whereas if you send your child to private school, then you get to determine, like, I guess you don't exactly get to determine the curriculum, but you have a better chance of like determining what they're going to learn about. I honestly want to homeschool my children because I despise our education system, and I'd rather teach my children valuable skills. But that's also a balance of like time and having the energy in order to teach them. You think this is happening in China too? I don't know. I feel like China's, and it could be just what they're making the public perceive, right? China is not the most honest country. Neither is the U.S. government. But I think that they're more STEM-based than the U.S. I don't think that they're focused on, things that don't matter and things that won't improve the country. Yeah. Yeah, it's just part of the system. Like going to school for 8 hours a day, because that's what our system has been, right? We work these 9 to 5 jobs and, don't have much free time outside of that. You have 24 hours a day. You sleep for 8, you work for 8, you have 8 hours left over, which it's really awful in my opinion. Like 2/3 of your life is spent working or sleeping, and then you only get to enjoy a third of your life. Ugh. It's a terrible system. Teach them how to trade options at 3 years old, and they'll live a good life. Yeah, I was talking to her this morning. She was asleep during this, which not too surprising considering that it's probably boring for her. But I was talking about the dollar index this morning while she was falling asleep, talking about how it was gapping up overnight, and then we talked about support and resistance levels at for SPY for the day. So I'm giving her my morning analysis. Maybe she'll figure out how to do my analysis for me. Struggling with putting a stop loss and profit take on an Iron Condor. Ended up with a credit of around $3 playing it the day before expiry. So really need to put up safety nets. Are you using Robinhood? Or are you using a different platform? If you're using Robinhood, the way to set up a stop loss or take profit order, this little button right here, stop limit order. Now you can't set a take profit and a stop loss order at the same time. So you'd have to pick one or the other if you're using Robinhood. With IKBR, I haven't used it enough to figure out how their platform works. Let me see how to set up stop loss order interactive broker stop orders. So this page should give some decent guidance. We'll read through it right quickly. Stop order is an instruction to submit a buy or sell order if and when the stop trigger is attained. And it should be available in combination, so that would be spread options. So I don't know how it's set up. Let's see. I hope you don't have to pay for this. That would be stupid. All right. So this page should be helpful too. Yeah, work to live, not live to work. I would say if you can find something that you're passionate about to work towards, it would be a lot more fulfilling. Like for me, what I do for a living, this YouTube channel, options trading, I enjoy it. You know, it's still a job nonetheless. Like I would much rather be spending my time with my family, but at least I get to enjoy what I'm doing in order to make a living, right? I would say find something that you enjoy and specialize that for a long period of time. You aren't going to see good results in the beginning. So having, a decent cash pile would definitely be useful. I would say if you want to get away from the 9-to-5 life, the best way to do that, save up between like 6 months and 1 year of cash, probably towards the 1 year mark, I would say, just for a nice, decent safety net. Save up a year worth of expenses. So if I'm spending, say, $3,000 a month and I want to save 12 months, that would be $36,000 that I would need in cash. So now I can take off for the next 12 months and I'm going to be fine. And in the meantime, I can work on whatever I'm, wanting to do. So say I wanted to drop the YouTube channel, I would want $36,000 in cash, and then, I could stop making videos. For me, I would still be making passive income because the videos are still getting views. But let's say I wasn't getting any passive income. Then I would find something that I'm more passionate about, say developing the app that I'm working on. Focus all of my energy on that, all of my time and energy on that, and then try to make money out of it, right? So if your goal is to get away from the 9 to 5, save up as much cash as you can to have some runway, and then, have the persistence, especially in the beginning, even when it's going to be tough. Like for me, I didn't start making money on YouTube, and I didn't start making money on trading even for a couple years. So for YouTube, if we go over to my analytics, I didn't start making money until 6 months after I started this channel. If we go to my lifetime, and I've only made $35,000 since I started the YouTube. So it's not a ton of money considering that I've been doing this for 3 years at this point. That's like $10,000. I might as well have been working at McDonald's, but at least I get to enjoy what I do, right? Probably wouldn't enjoy flipping burgers, but started the channel in February of 2020, and I didn't start making a single dollar until September 16th. So started the channel in February, didn't make any profits out of it until September. And then for trading, I've been trading options at least since March of 2020, so about the same time that I started the channel. And I didn't start becoming profitable until 2022, where I made about $6,000, which again still isn't a lot of money, but I have that backup of cash that I saved up to kind of hold me over. And then I also, living with my wife really helps. Having a partner definitely helps out financially. So as long as you have the cash and you have some sort of backup, I would say it would be suitable to, quit your job if you have 12 months of savings and then just hammer in on what you're passionate about. All right, it's 10:30 almost. Really not seeing any move out of the market. Like we ended up going to 408.50, but then we didn't cross it again. So that's the second time that we bounced on it. And we're just trading between 45 RSI and 30. That would be bearish, which would signal us going below 408.50, but considering that we bounced on it twice, it seems a little bit less likely. Yeah, no problem. Try to keep it as real as possible. Whole watch list just went red. Uber, PayPal, and Disney are all red, so those are the 3 earnings for this week. Am I streaming the Powell speech or not? I guess so. We got 35 likes on the video, so I feel like that's substantial enough to stream it. So what we'll do here, since we're not really getting any move, is I will cut us off at 10:30, give us another 5 minutes, and then I will come back at 12:40. So let me set up the Powell live session and log my trades. All right, so go into the YouTube studio. Oh, wait, it's already here. Create a new live. Schedule. Reuse settings. Powell at 12:40 p.m. Eastern. All right. Today. And this will be at 12:40 for y'all. So I'll schedule it for 12:30. I'll be like 10 minutes early just to set things up. And that one is today at 12. So it starts at 12:40, but I'll start at 12:30 just to preface it a little bit. All right. Sweet. So now let's head on over to Drive. Yeah, no problem. Yeah, we'll regroup at 12:30. More money from YouTube or trading. So far, it's been trading. So far it's been YouTube. $30,000 that I made with YouTube, and then about $6,000 that I made with trading. But I didn't really become profitable with trading until the second year that I was doing my YouTube channel. So, now I'm starting to become a little bit more consistent with my profits. I've made it a goal to try to make $100 a day. Obviously, it's not going to be every day. I'm roughly making about $60 a day through the YouTube channel. So the goal is to have the trading do about 2 times better than what I can get out of my YouTube channel. But so far, I've been on track with my goal. For the last couple of weeks, every day was above, every day but Thursday was above 100. Started yesterday with 144, and then if we look at the January log, the January calendar, I should say, 110, 237. So as long as we continue this trend, I'll definitely be making more trading than I will out of the YouTube channel. And then it also is reliant on how much capital I'm using. So I'm using very little capital whenever it comes to options trading. I only use about $6,000 total in order to trade options. So if I start to increase that, if I feel a little bit more comfortable with my risk, then I can start, yielding more out of that. So if I'm making $100 a day on $6,000 that I'm using to trade, that's about 1.6% a day. Now, it's not to say that, if I'm increasing this to double $12,000 that I'm going to be making $200 a day. Because, the more that you're taking on and risk, the more that you're going to lose on your losses. And that's kind of a thing that I've struggled with. But ever since I started reducing my positions to just like $200-$300, I become comfortable with that. And I've been reducing my loss size, which has really helped to aid, making $100 a day. But let me log the trades that I made. So I think I just opened one. SPY, put, debit. This is a bearish strategy. I cannot. Bearish. Expiration date is today. Yeah, no problem. Strike prices I chose was 407, 406. I forget how many I opened. You can always check. 407, 406, expiring today. 32 cents each for 6. All right. Let's see if there's anything that I'm missing here. Did I not log this one? Let me see. Tesla call debit spread. This one I did end up closing at a loss. And I forgot to log. Go over to the Discord and find that. What's the most important thing to know if you want to get into options trading? It takes time. It takes a lot more time than you'll probably expect. I've been trading options for, 3 years at this point, and I can still feel like a dumbass on some trades. Like, there's still a lot for me to learn after 3 years, and it takes, I would say it takes a lifetime to be a real expert in trading. But everybody, whenever they get into options trading, they expect to be rich super quick because of, social media and the get-rich-quick scheme. So people expect to make 1,000% profit after, just a few weeks, where in reality, if you do have 1,000% profits in the first 3 weeks, you probably got lucky. What's known as a Dunning-Kruger effect. But, as you continue to trade options and you gain the experience, just like with anything, any skill, you're going to develop more expertise in it. You'll get better. I would say the most important things is definitely managing your risk. Don't take on a shit ton of risk. In the beginning, whenever I was trading options, I risked like $12,000 on a trade, and I ended up losing that full $12,000 because with options, it's binary. You're either going to take max profit or max loss. So don't put a third of your portfolio into a single trade. Otherwise, chances are you're probably going to be wrong. You're going to be overconfident in the trade too, and then you're going to end up losing that $12,000 or whatever you decide to risk. But looking at Tesla, sold my 4 of my shares out of the 40 that I own yesterday. And then the call debit spreads I closed at 13. Wait, did I close? Huh. I didn't realize that I took that much of a loss, but okay. So that actually reduces some of my profits. 97, that was on 2-3. So that reduced my profits from Friday down to 39 from like 140. So hopefully we can make up for that today and later this week. Yeah, I would say max you should put on a trade is like 5% of your account. And then I would also have a separate account for long-term investments versus options trading. So I have roughly $40,000 in long-term investments, whereas I only have $6,000 that I use to trade options. So I'd separate those two accounts, and with your options account, only put up like 2 to 5% in risk. But yeah, that is the end for the live session this morning, and I will catch y'all at 12:30 for Powell. Sounds like my baby is crying right now, so I got to go attend to that. See you later, everybody.